Google just reported one of its strongest quarters ever. Revenue topped $400 billion for the year. Search is still growing at a healthy pace. Cloud margins surged, and AI usage is exploding across the platform. So if everything looks this good, why are investors still uneasy about Google's future? In this video, we'll break down what actually mattered in Google's earnings and what the headlines missed. Now let's look at the numbers. Alphabet's fourth quarter earnings came in strong across most key metrics. Revenue reached $113.8 billion, beating expectations of $111.4 billion. Earnings per share came in at $2.82, well above the $2.65 estimate. Cloud was another standout. Revenue climbed to $17.66 billion, topping forecasts and continuing its strong growth trend. Advertising revenue also surprised to the upside, coming in at $82.28 billion, showing that ad demand remains resilient despite macro and competitive pressures. The only real blemish was operating income, which came in slightly below estimates at $35.9 billion, reflecting higher costs tied to AI investment. Overall, this was a clear beat on revenue, earnings, cloud, and ads, with just a small miss on operating income. Now let's talk about guidance, because this is where the tone shifted. Google didn't issue traditional numerical guidance, but management was very clear about direction. AI spending remains elevated, capital expenditures are rising, and profitability will be balanced against long-term AI leadership, not short-term margin optimization. In other words, Google is choosing scale, infrastructure, and dominance over near-term optics, even if that makes the financials look less clean in the short run. That decision matters a lot for how investors value the stock. The biggest takeaway from the call is that AI is already deeply embedded across Google's business, not as a side project, but as core infrastructure. Management said Gemini now has over 750 million monthly users and is processing more than 10 billion tokens per minute across search, ads, cloud, YouTube, and Workspace. What's important is how Google framed this. They didn't hype Gemini as a standalone chatbot or consumer novelty. Instead, they positioned it as something that quietly improves everything Google already does, especially ads, search relevance, and user engagement. And that showed up in the numbers. Search revenue still grew at a double-digit rate, directly pushing back on the idea that AI is killing Google's core business. If anything, AI is making search ads more relevant, more targeted, and more profitable, strengthening Google's biggest cash engine. Another major development was Google Cloud. Revenue grew nearly 50% year over year, but the bigger surprise was profitability. Cloud operating margins jumped to around 30%, confirming this wasn't just growth, it was high-quality, profitable growth. For years, cloud was seen as a drag on earnings and valuation. This quarter made it clear that narrative has changed. Cloud is no longer just a growth story, it's becoming a margin expansion story. On the spending side, Google was very upfront. AI investment is expensive, and capital expenditures nearly doubled year over year. Management made it clear they are prioritizing long-term AI leadership over short-term margin optimization. That's great for the long run, but it explains why some investors remain cautious, especially those focused on near-term cash flow and operating leverage. There was also no indication that AI spending will slow down anytime soon. Google is building data centers, buying chips, and scaling infrastructure aggressively to stay ahead in an increasingly competitive AI landscape. This brings us to something that wasn't announced, but is being talked about a lot. There are rumors in the industry about a potential Apple-Google partnership involving Gemini, especially as Apple looks to enhance Siri and on-device AI. To be clear, nothing like this was confirmed in the earnings call, but if such a partnership ever materialized, it would be a massive distribution win for Google, potentially putting Gemini-powered intelligence into hundreds of millions of Apple devices overnight. The benefits would be clear. Apple gets best-in-class AI models, Google massively expands Gemini's reach, and both companies avoid reinventing what the other already does well. Again, this is speculation, not fact, but it highlights how strategically important Gemini could become beyond Google's own ecosystem. Zooming out, this earnings call made one thing very clear. Google is all in on AI, and that commitment comes with rising costs, heavier spending, and margin pressure in the short term. Whether this becomes a massive long-term win or an expensive detour depends on how quickly AI turns scale into sustained profits, and how investors react while spending remains elevated.